What's up, traders? Kevin Kissel coming at you from Touchdown Trades with a strategy for trading penny stocks for beginning and new traders looking to quickly grow their account size without risking too much of their capital. I have a strategy that I've been using for a long time, which has took me from waiting tables for about $40,000 a year to now trading for a living from my home office and not having to go work a 9-to-5 job or do something I don't want to do. Now, this strategy, you need a broker that you can get short locates on for these low float NASDAQ penny stocks, but I'll also share with you a couple of brokers for US citizens and people trading outside the US. So let's get into it, guys. Alright guys, let's get into this tutorial here. So the strategy I'm going to be talking about today is personally my most profitable strategy and has made me hundreds of thousands of dollars over the last few years. And the strategy is shorting failed low float breakouts. All the big chat rooms teach to buy low float breakouts, and the Warrior Trading, the Ross Cameron, what are some other big chat rooms out there that they all teach to buy the breakout, right? So you have the head trader in the chat room calling out the trade, the alert, and all of his sheep, all the members of the chat are buying into the breakout. And if that breakout comes up, you're usually going to get a little spike as the chat room buys into it. But if that breakout fails, what are they going to do? They're all going to sell, and it's going to dump hard. And if you're able to spot the breakout as it fails and get in short, then you can just crush it. And the risk reward ratio is outrageous. The accuracy rate isn't great. It isn't anything crazy. My accuracy is about 55-60%, but because the risk reward is like 5 to 1, the accuracy it just doesn't matter. You know, you're getting such a return back on your risk that it's just such a good strategy. And stay tuned till the end, and I'll share with you some brokers that are really good for getting locates on these low float NASDAQ penny stocks for both US citizens and people trading outside the US as well. All right, so let's jump into it here. I got an example pulled up on this HEPA, right? This was a runner a few days back, and it was gapping up pre-market on some news. So this dark gray area here is pre-market. So it gaps up, runs up, and I never trade these pre-market because it's just harder to trade pre-market, right? Not as much liquidity, and they're just harder to predict the moves. So it gaps up pre-market, sells off into the open, and when it opens, it's just chopping around. And then it does have a nice breakout. It breaks out of this consolidation and moves up towards the pre-market highs. And you have this pre-market pivot around 520. And it first tests it, pulls back. And traders are watching this in this area to see if it can break this level. And as it's consolidating in this 5-minute candle right here, you have chat rooms watching it. And then as it breaks, everybody's getting long as it breaks. Okay? So how do you know if it fails? So it breaks, and how do you know if it fails? Well, if a stock breaks a key level like that, it should be up testing these pre-market highs right away. It shouldn't be back testing this level and having trouble pushing through. No, it should be going to the moon. But it isn't. It pulls back and it drops underneath, and I'm getting short right here in this area as it breaks underneath. So what you want to see on the break below is, it doesn't have to flush right away, but I trade off a 5-minute chart, and I don't want to see a candle close above this level, this 520 level. And I'm 100% out if we get a break of the highs. So this strategy is so great because you have defined risk. What is your defined risk? You're out of the trade with a loss if it breaks the highs. This high and this this push here. Not the pre-market highs, but the highs of this push. I'm out. You know, and if it breaks this level and comes up here and breaks pre-market highs and fails, I'll get back in. But it's better to take paper cut losses than it is to add into a loser, add, and then you're stuck if it keeps running up, and then your account's blown. This strategy, you get in with a defined risk, and if you're wrong, it's okay. You get out and you attack later. So should you trade off of a 5-minute chart or a 1-minute chart? I personally prefer a 5-minute chart because there's not as much noise, but if you find success using a 1-minute chart, there's nothing wrong with it. There's going to be a little bit more noise, but you could find better entries than me personally. I do use a 1-minute chart to find entries sometimes, to find those precision entries as it comes back down. If it breaks the level that's in play right here, the 520 level, for example, and let's pull up a 1-minute chart and I'll show you. Oh, this happened a few days ago, so we're not gonna be able to see it on a 1-minute. But for example, right, it breaks the 520 level, comes back down, and you're looking for the short on the retest 520, fail short. So on a 1-minute chart, it may be easier to see that fail and to get short. All right, so that's an example on the HEPA runner the other day. Let's look for a couple more examples. All right, guys, so here is the infamous SES, the short squeeze from last week. This was the 4th day, I believe. It had already came back down considerably. But if you look here, we haven't run up from 775 area to about 1075. And this was a key level from the first day that it was squeezing. And you know, chat rooms, the Warrior Trading chat room was getting long as it broke this level. And it was looking like it wanted to hold too, but it couldn't hold. So everybody's stuck up here, right? Everybody who's long stuck up here. And as it comes back down, they're stopping out. And as it comes back, test the level. You got the perfect, beautiful test. So you could get a little bit, you could take a starter as the initial crack, and then add full size on the retest, and as it fails, and cover into this. And then you have the exact same thing happen. Breaks the level, fails short, and it was near the end of market close, so I personally wouldn't have taken the trade. But if you're a swing trader and you can find cheap locates, you hold it overnight, you're short at 950, cover in within the first 20 minutes the next day at 775. All right, let's check out a couple more examples here. All right, guys, so this BIMI, another runner that was a sympathy play off the SES from last week, is just littered with failed breakouts, okay? So we have this purple line is a trend line that I pulled off the daily chart, and it's obviously valid, right? Look at it. Look how many interactions it has. We have 1, 2, 3, 4, 5, 6, 7, 8 interactions that are valid. I mean, if that's not people say technicals aren't real, technical trading isn't real, they can kiss my ass. Look at this. Look at this chart. Look at this trend line, how valid that trend line is. All right, so let's look at these failed breakouts. All right, so the first day it comes down, cracks, and then if you're a dip buyer, you're thinking it's going to reclaim this trend line, fails, you're short, you're writing it down. You get a second test, breaks the trend line for a second, fails. Those aren't the best trades. It wasn't the best range, but here's a good one right here. All right, so it cracks the trend line, and you have a confluence of a level at 670 and the trend line at 640. So I would even not be opposed to be getting short into this right here. You take a starter, add, and if it holds this level, you're out. But even if you wanted to stay safe and let it fail this trend line first, your stops over the highs, and you write it down covering into the wash. See if we got any more. So you have the 780 level. Look at all these failed breakouts. Failed breakout, stop over this $8 level. You have a nice trade. Almost $2 in 20 minutes. Same thing happens, comes up, tests the level, fails, and you write it down. It's just a thing of beauty, guys. If you can find these levels that are valid and trade the failed breakouts over them, the risk to reward is unbelievable. And let me see if I can find one more example for y'all, and then we'll talk about brokers. Alright, so we have this BNGO, bingo, from last week as well. It had squeezed up, I think, about 300% on this day, 200% on this day. And there was a level off the daily at 350, right? So here's an example. Let me show you an example first of a trade that I took that I lost money on. But because the risk is already defined for us, it was such a small trade, such a small loss, that I was able to come back, attack later in the day, and make my loss back tenfold. Okay, so I took a trade here. When it came back up, failed this level, right? This 270 level, and I got short in this area, and I got stopped out up here for about a 8-cent loss, I believe it was. Okay, so it rips on me, and then I take this fail right here, and I'm covered into the wash. I think I had taken about 3/4 of my position off and did get stopped out right here, but I got back in on this 350 fail, and I wrote it all the way down, covering into this 230 level. So you're looking for the break of the key level, and then as it consolidates over the key level, it should not break below the key level again. It should be consolidation, maybe a quick retest, not even come back and touch the level all the way, and then a blast off. But if it breaks level, consolidates, and then fails, that's your entry alert, and you should be short. Alright guys, let's talk about brokers for this strategy. You can't just trade this strategy with an E-Trade or a TD Ameritrade because they don't have short locates on these low float NASDAQ penny stocks. You're going to have to go to a brokerage that has a good clearing firm that offers hard to borrow stocks, and you do have to pay to locate these, usually anywhere from 2 cents a share to 20 cents a share depending on the demand for the ticker. And that's okay because my locate fees have only ate up about 10% of my profit from trading this strategy. It can get expensive, but it's completely worth it. So there's 3 brokers for US traders, US citizens that I would recommend. The first 2, you're going to need at least $30,000 in your account to trade with them. The first one is Centerpoint Securities, which is the cream of the crop for shorting these NASDAQ runners. They're a really good broker. I believe their commissions are 0.004 cents a share, and they do have locates on about any of these tickers that you're looking for. They offer a couple clearing firms. I believe they have ETC, which has a good easy to borrow short locate list, but the hard to borrow is not the greatest. The other one is what is that one? The other clearing firm is Vision that they use, which has a awesome hard to borrow list. You can get hard to borrow locates on just about anything using their Vision clearing firm. The second broker for US citizens that I recommend is going to be Cobra Trading. I believe they clear through Wedbush, which offers a decent hard to borrow list, not as good as Centerpoint Vision clearing firm, but it is good, and you'll be able to get locates on most any NASDAQ runner, and they also have a minimum of $30,000 to trade with. The third broker for U.S. citizens for shorting these low float NASDAQ runners that I recommend, and this is the one that newer traders will probably end up having to use because of the lower account minimum, is TradeZero US. They only require, I think, $2,000 to open an account with them, and they have a really good short, hard to borrow locate list, and they clear through ETC right now, but I believe they're moving to another clearing firm called Apex here shortly, so hopefully that doesn't mess up the locates at TradeZero US. And for foreign traders, I would recommend TradeZero in the Bahamas, which is their other division that accepts foreign non-US citizens, and they clear through Vision, which is awesome. So if you're not living in the US, you have TradeZero, which clears through Vision in the Bahamas, and it is really good. You can get locates on anything. It's the same clearing firm that Centerpoint uses, so check them out. Alright guys, I hope this tutorial was informative. If it was, give me a thumbs up. The YouTube algorithm really appreciates it when you give me a thumbs up. Subscribe, and I'll catch you in the next video. Thanks for watching. Peace.
Drop.